Shadow of Truth with your host Dave Kranzler from investmentresearchdynamics.com and Rory Hall from thedailycoin.org. And today is Wednesday, June 17th, 2015. Dave, how you doing today?
I'm doing well, thanks. How about you?
I'm doing all right. We've got a couple of market updates for you guys, and it's going to be very, very brief, very pointed. So let's just jump right in. What do you say?
That sounds good to me.
And I want to, if you don't mind, Dave, I'd like to start off with this Shanghai Containerized Freight Index total collapse. Comes to us by way of Wolf Richter over at Wolf Street. And as you all know, this is one of my favorite indexes to look at, because if you're not shipping anything out to the Eurozone or to the United States, then chances are the global economy is not doing too well. And according to the statistics, the containerized freight coming out of China in particular, and more specifically the Shanghai containerized freight index, fell by 6.8% in 1 week's time. And I want to read this real quick. We are now shipping at an absolute loss, with the bunker adjustment factor surcharge at $300 for Asia, Europe. We are losing more than $50 per box unless by miracle demand grows. We are up for heavy losses in the next quarter and maybe the rest of 2015. That about sums it up for this year.
Yes, and actually, just point of clarification, I prefer to say indices instead of indexes, but I guess it's really a tomato-tomato thing.
Okay.
But just to clarify for the listener, the China Containerized Freight Index has a blend of spot rates and contractual rates, and the Shanghai Containerized Freight Index is strictly based on spot rates. So the fact that it's plunging like this indicates that there's a serious fall off in demand for Chinese products from around the world. So, and this basically reflects the plunges that we're seeing in consumer demand, and specifically Europe and the United States are China's largest markets. So it basically reflects the fact that, by far, reflects the fact that there's absolutely an incredible decline in demand from the U.S. and Europe, which reflects the fact that both the U.S. and European economies, I believe, are in the early stages of collapsing.
According to this, they have to be, because, and there's two more points that I want to bring up. Well, actually, there's three, because I want to go back to, Dave, if you remember, you and I took a lot of flack back in February when we were talking about the Baltic Dry Index and saying that was an indicator of how things are collapsing, and this is backing it up. And people were coming out and saying, well, you guys have it wrong. There's this strike going on. The longshoremen are on strike, and so there's no demand, blah, blah, blah. Well, hello, that's over. So, and then the other two things are, the Shanghai Containerized Freight Index has collapsed by 47% since February. And back in February, this index or indice hit its all-time low from the time of its inception, and it is down 42% overall since October 16th, 2009, which is when we were in the height of the financial crisis. That's when the financial crisis originally started. It's down 42% from that time, and it's down an additional 47% since February. So we are in serious cliff dive mode here.
It's pretty easy supply and demand math. China's the world's largest exporter. If their shipping rates are plunging like this, it means they're not exporting, and they're not exporting because there's no demand.
And there you have it. And what about Greece, Dave? Let's jump over there and see what's going on.
go for it. I think you had a couple points that you wanted to make, although I will say that it looks like I'll be eating a plate of crow at this point, because I had predicted that they would work out a deal to keep Greece in the EU, but it looks like there's not really going to be the possibility of a deal, and it seems like Greece is digging its heels in the sand a lot more every day.
Well, it's not over yet. So
I agree.
it's not over. It's a multifaceted piece of work that these guys are dealing with, and I go back to the closed door meeting that Sirpas had with Putin about 2 months ago. It was a closed door meeting, and then just a few weeks ago, we find out that Putin has invited Greece to join the BRICS consortium. Okay, there are no G's in BRICS, so but there is now. So that kind of changes the whole dynamics of everything, and I believe that Greece has what China and Russia both want, which is a gateway into Southern Europe, and this has been part of my argument the whole time. And Russia wants a military port in Greece, and they also want to run their pipelines for natural gas, gasoline, and oil through Greece. China wants an inroads for the new Silk Road. It's in their interest. There's too many things that Greece can offer to the world, and in particular the Eastern world, that the Western world can't. The only thing the Western world has ever offered them is debt, and Sirpas and Varoufakis both told these guys, you're nothing but a bunch of criminals, and we don't owe this debt. That's what they've said the whole time. That's what their platform was. Siripas's platform was, we're getting out of the Eurozone, we're getting out of the Euro, and that's what he was elected to do. And I believe that's what he's going to do. Come hook or crook, he's going to get out, because they, if you owe somebody money that you don't really actually owe them, who cares? Who cares? They don't actually owe that money. I know there's a contract for it and blah blah blah, but they don't care about that. They could care less. They know it's a criminal act, then they even said so. But that's
Just real quickly here, there was an article in which the author suggested that the big banks with exposure to sovereign Greek debt, and I don't know if that means derivatives as well, I kind of doubt it, but he suggested that the big banks have effectively transferred their Greek debt to the Troika, which would be the EU, the ECB system, and the IMF. Of course, the IMF, that debt is backstopped by the U.S., so that means the U.S. taxpayer. And if that's the case, then it may well be that the EU is willing to write off Greece and let Greece write off its debt. Now, there was an interesting piece in Zero Hedge. Apparently, the Speaker of the Greek Parliament and a Syriza member established a truth committee on public debt, because I guess the thought is that a lot of this debt was sort of shoved on Greece, and the people shoving it on Greece were doing it to kick the whole EU can down the road, and they knew full and well that Greece wouldn't be able to pay back the debt. And they issued preliminary findings in which they declared that all debt to the Troika is illegal, illegitimate, and odious. And it concluded that they don't need to pay this debt. So maybe Greece is willing to pull the plug.
I hope, because odious debt is not my debt, and that's the way that the Greeks feel about it as well. Don't pile your garbage in my front yard and expect me to accept it. And what else is on your mind there, Dave? I think you had something
Just
else.
one thing real quickly, because as everyone listening to this knows, gold has been weak, very weak this week, despite all of the fundamental news which should be propelling gold higher. The Greek situation, continued horrific economic news out of the U.S. In fact, I just posted a new piece on my blog in which I outline the case that the current housing bubble 2.0 is getting ready to blow up in this country. In reality, the fundamental backdrop going on here and around the world should be propelling gold higher, but it's not. We know about the incredible amount of manipulation going on right now. And several months ago, Zero Hedge had actually done a informal statistical study, and it took the 7 weeks of FOMC meetings, and it found that on average over those 7 weeks, the price of gold when there was an FOMC meeting and an FOMC policy decision, the price of gold dropped $38.
Wow.
Now this week gold's down about $6, but the week's not over, and it will remain to be seen what happens once they issue their policy statement. Typically, gold moves big one way or the other. This market's so manipulated. There's no telling. In terms of the way I characterized FOMC day on my blog, I noted that the Fed's FOMC is concluding another 2-day meeting today and will issue its latest policy statement around 2 p.m. Eastern Standard Time, as the idiots on financial TV sit on the edge of their seat trying to figure out which word or syllable has changed from the last policy decision statement. The entire process is nothing more than a well-staged theater of the absurd. And that about sums up this whole week for me. I am still standing firm on my forecast that silver will be the best performing asset for 2015 outside of the junior mining stocks.
And if the Greeks follow Hugo Salinas Price's suggestion and reintroduce the drachma and back it with silver, then you will be 100% correct.
I don't even think I need that to happen.
No, I think that
I wouldn't write that scenario off. I think it's entirely possible.
I do too. I think that it is, and I think that I have to agree with you. I think that silver is going to be the best performing asset, even though I'm not a trader and I don't look at them, don't have a whole lot to do with the markets. I'm not so blind that I can't see that uptrend in silver that I don't see in any of the other markets. They're not moving up. So
that's exactly right.
But anyway, is there anything else we got, Dave?
That's all I got. You got anything else?
No, I think that's it, my friend. And we'll pick this up in a day or so. We do have Steve St. Angelo from SRS Rocco Report. We're going to do an interview with him tomorrow, and that'll be posted on Friday. So, guys, keep a lookout for that. Otherwise, Dave, I'll talk to you tomorrow, and we'll just take it from there.
Sounds good. Enjoy the rest of your day.
All right, buddy. Talk to you later.